All right, so we are doing a question from the most recent past paper available on the ACCA website, which is September-December 2021, and this is the most recent one available in the form of the PDF exams. So let's go to the requirement. Requirement, first of all, we have is a requirement relevant to the internal controls, which is describe the limitations of the internal control. Now it is a 4-mark question, and this is a knowledge-based part. Knowledge-based part. That means you can just cram it straight away from the notes. And these are the easy marks that you can get in the exam. Now, the limitation of the internal controls means, for example, human error is the limitation of the internal control. Unforeseeable circumstances, like the controls are implemented against a specific risk. But for example, if there's any unforeseeable event, unforeseeable circumstances, then that is the limitation of the internal controls. So unforeseeable events or circumstances. Then we have the human error, which is one of the most common limitation of the internal control. Then we have the intentional override of controls by the management. That means if the management is overriding the controls, and the intention, it is intentional one because they have implemented the control, they know the loopholes as well. So unforeseeable events is the internal controls are implemented against a specific risk. But for example, if there's anything which is new, like for example, the COVID, no one knew that the world can be shut down for such a long time. So they were not having such pandemic in their mind. They used to have, okay, that the production can stop for a week, for 2 weeks, maximum a month, but who knew that it can be stopped for years? So that means this is the unforeseeable. So no one was prepared for that. So there were no internal controls relevant to these. Then we have the human errors. Yes, obviously this is the most normal and common limitation of the controls. And then we have the intentional override by the management. Similarly, the use of judgment. So these are written in your notes. You can just go there and cram it straight away and get easy and absolute marks if these questions are tested again or something different is being tested again. Okay, then we have the B requirement. Identify and explain 8 deficiencies in the Pomeranian's company's internal control system and provide a control recommendation to address each of these deficiencies. So identify means that you're going to pick up that thing from the case study, just the case study line, and then we have the explanation. That explanation means simply the impact of those deficiencies. Now the impact is simply the effect, the negative outcome, the effect of that negative outcome. So identify means the case study line, and explanation means the negative impact of that deficiency and how it is going to impact the business, negative impact. So 8 deficiencies. So 1 mark for identifying it, 0.5 marks for identifying, 0.5 marks for the explanation. So you get 1 mark for each identified and explained deficiency. And then you need to provide a recommendation. Control recommendation means how to overcome that weakness. So see, there's no test of control thing in this requirement. Students usually get confused that, okay, when they're asking for the control recommendation, whether this is a test of control. No, this is not a test of control. This is a control recommendation, how to overcome the weakness, how to fix that weakness. The test of control is not given in this requirement. if it is being given, that is going to be a separate requirement. It contains separate marks. And test of control, you would never apply on the deficiencies. Either they're going to ask you to apply the test of controls on key controls, that means the strengths, or if they're giving them in the question of the weakness, then they are going to say you that consider that everything is operating fine, then you are going to apply the test of control. So that is a separate requirement, and I've explained them in my video of the exam requirements. So let's go to the question. So yes, limitations, and then we have the identify and explain 8 deficiencies in the internal control system. Now, one thing I need to explain more, that it is not about the specific, system. Like usually the examiner says, in respect of the sales system, identify and explain the deficiencies. In respect of the purchase system, in respect of the payroll system. So it is in respect of the internal control system. That means it's a generic question. So you can see they have the sales thing over here. They have the purchase in the inventory. So they have multiple things within the question. Even they have the non-current assets. So it's not only about the sales or the purchase or the payroll. It's a generic question where they are talking about the internal control system. So it's not specific. So that means you can identify the deficiency from the overall system, which is given in the exam question. But if the examiner says that in respect of the sales system, then you are not supposed to write anything relevant to the purchases. If they say, like, for example, in respect of the non-current asset system, then you are not supposed to write anything in relation to the inventory system. So it is 1st July 20x5, and Pomeranian company is a manufacturer of the fizzy drinks and operates across the country. The company's year end is 30 September. You are an audit supervisor of the Poodle and Company, and you're reviewing the extracts from the internal control documentation in preparation for the forthcoming audit. Sales. All new customers of the Pomeranian company are required to pass the suitable credit checks. Now, the ACC exams, I should say that basically, like for example, when it comes to F8, we are currently talking about. If you see all those internal control questions and read them, they are almost the same. Every time you see the same wording over there with a bit difference. They can be a fractional difference, but usually it is the same. Now this thing, all new customers of the Pomeranian company are required to pass suitable criteria. I have read this statement, I don't know, in many questions. I can't number it right now. So, but I have read this statement in many questions. So the point is that when you're preparing the internal controls and you're allocating your day, okay, today we are supposed to prepare the internal controls, just make sure that you're reading the question and the answers of the maximum questions. Even if you're not attempting it yourself, keeping a time track or typing it, etc. Even if you're not doing it, just make sure you're reading all the questions and the respective answers. Because every time it is almost the same question that is being tested. Usually the ACC staff and the quality assurance team, when they meet us, they have a different opinion every time. They say we have a different paper, but no, they don't have the different paper every time. There are 80 to 90% similarity. If you see all the audit risk questions, they are same. All the substantive questions, they are same. All the report questions, they are same. All the ethics questions, they are same. Because one thing is in the syllabus, so they have to test the same thing again and again. Wording can be a bit different, but the concept remains the same. So all new customers of Pomeranian company are required to pass suitable credit checks. And remember one more thing, that every line is not a deficiency. For example, all new customers of Pomeranian company are required to pass suitable credit checks. So just don't consider a deficiency. Okay, why every customer is going to the credit checks? It will take too much time. The company may lose focus. No, every line is not the deficiency. Just try to identify the major ones from the case study. Upon passing the credit check, customers are set up in the receivable ledger master file. Now, the master file is a file where their data is going to be saved. that okay, the unique number will be over there, with reference to which their file will be accessed, their file will be open, their name and their credit limit and their credit days, and all the things will be there. So upon passing the credit check, customers are set up in the receivable ledger master file. Now, master file is a file which is an important document, and any data which is being saved in that file remains over there unless and until it is being modified by a senior personnel. And the credit limit is set by the sales director. The credit limits are only then changed when a customer requests an increase. So it's fine that the credit limit is set by the sales director. Usually it is, for example, the credit limit is being set by the receivable ledger clerk. Then we say, no, the clerk is not the appropriate person to deal with the credit limits. They may set credit limits either too low or too high, or they may give some unusual favors to the customers, blah, blah, blah. So usually we write those things. But here it is a bit different. The credit limit is set by the sales director. It's fine. Don't just comment, no, sales director is the senior most person. Why he's indulging himself in such a small level things? No, it's not a weakness. So it's fine that the sales director is doing that thing because it's about the master file. It's a strategic level work. The credit limits are only then changed. Now the credit limits should be changed ideally when it should be changed. If the customer is going fine, for example, they're making the regular payments and the company wants them to buy more and they give them the extended credit limit. For example, good customer, good credit rating, you actually expect them to buy more from your company. So you tell them, okay, your credit limit, for example, it is $100,000 right now. So you say them, okay, $150,000, we're extending your credit limit so that you can buy more. So we only extend the credit limits to the good customers. And when there decrease, the decreases are when the customer is not paying well, they have a very bad credit rating, and accordingly we have to decrease their credit limits, because if we keep on giving them the same credit, even if they are not paying well, that will result in the irrecoverable debts, that will result in the bad debts. So the credit limits are only changed when a customer requests an increase, otherwise it remains static. So now this is the problem, that maybe there are customers who are not paying well, they have a very bad credit rating, poor credit rating, and still the company is giving them the same credit, which can result in the increased bad debts, irrecoverable debts. So this is the deficiency. Now the credit limits should be changed based on the customer credit rating alongside the request of the customers. Because yes, maybe they are good customers and they're requesting you to extend the limit. Yes, we will consider the request, but that is an additional feature. Usually it should be changed when the customers are performing well, okay, increase it. When the customers are not performing well, okay, decrease it. So how to write this thing? First of all, we are going to take the case study line. So let me just write it for you. I can write it over here, yes. Credit limit is set by the sales director and only changes on the request of the customer. So this is the deficiency and you have identified it. This is a deficiency and you have identified it. Now we are going to write the explanation of it. So first of all, you identify. Identify means the case study line, which we have already written. And now we are going to write the impact. We are not supposed to make these headings. We are supposed to write under this heading, controlled efficiency, the first of all, yes, credit limit is set by the sales director, and it is only changed when the customer requests that. So this is the identification. Then we start writing the impact. Credit limits are usually reviewed when customers are not paying well, and accordingly their credit limits needs to be decreased as a result. The static credit limit may result in significant bad debts. So this is the explanation. Now we are supposed to write the recommendation down of how the company should deal with this, because the credit limit remains static and they only change when the customer requests that. Other than that, it remains static. Credit limits should be regularly reviewed for customers having poor credit rating, or credit limit should be regularly reviewed for customers having poor payment record. So this is the recommendation. Now you can write in your own words. You can choose any words to write the same concept. Okay, going further. Customer orders are processed by Pomeranian Company's sales ordering department, and goods are dispatched from one of the company's warehouse. Okay, fine. Sequentially numbered multi-part good dispatch notes are completed, and copy is filed in the warehouse when the goods are dispatched. The copies of GDN are sent to the sales ordering department and the finance department on the weekly basis. Now, everything is fine. The sales orders are dispatched and from the company warehouses, and there's a multi-part good dispatch notes. Very good. One copy is filed with the warehouse so that they are aware that, okay, now the goods are dispatched. They should be aware of the order. What's the status of the order? If the copy is not filed with the warehouse, they will not have the record and they will not be updated regarding the status of the order. The copies of GDN are sent to the sales ordering department. The same is the scenario with the sales ordering department, because they have received the order. Warehouse department has dispatched the order. They should have the copy as the evidence, and they should be aware of the status that, okay, we have dispatched it when the sales ordering department is asking them. And the similar is the case with the sales ordering department. They should have the copy of it, because when the customer asks them where is my order, so they should know the status. Okay, this has been dispatched and it will reach you in blah 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 time. So both works the same. Warehouse should have the copy as an evidence and as to confirm the status. Similarly, with the sales ordering, they should have the copy as an evidence and for the status. And then we have the finance department on the weekly basis. Now the finance department, because the goods has been dispatched, now they should send the invoice to the customer. But if these invoices are sent on the weekly basis, now the weekly basis means that they are not sending immediately when the goods has been dispatched, and they are taking week time or more time to dispatch it, then the finance department may get late in recording the sales as well as in recording the receivables. Like for example, the goods has been dispatched and now it was near to the year end. And now the finance department is not aware that the good has been dispatched. So they will not be able to record the sales and the corresponding receivable, credit sales, debit receivable. So if the finance department is not aware of that the goods has been dispatched, then there may be a problem in recording the sales and the corresponding receivables. And also the sales ordering department receiving the copy of the GDN a week later may not be aware of the correct status of the order. When the customers are asking them, okay, what is the status of my order? Because they're not having the copy, they will not be able to give them the answer. Okay, they will be saying, okay, let's confirm it from the warehouse department, and the customer may get dissatisfied. So how this should be done? Usually the general recommendation is that they should do it on the frequent basis. Like by the day end, they should send all the dispatch orders. They should send the GDNs of all dispatch order to the sales ordering department, the finance department, or they should have an integrated system. When the orders are dispatched, an automatic copy should be sent to the sales ordering department and the finance department. So this is how you are going to write it. And let's just write it. Goods dispatch notes are sent to the ordering department and finance department on weekly basis. This delay may cause the problem in recording of sales and receivable balance in the accounting records. Also, ordering department may not be aware of the status of order. So recommendation, the copies of GDN, good dispatch note, should be sent on more frequent basis, such as by each day end, or company should have an integrated system where copies of GDN are automatically sent to the accounts department and the sales ordering department once the goods are dispatched. So this is how you are going to attempt it. It's most recent past paper you have, such an easy question. And as I said, all the questions are same. All you need to do is to read the maximum case studies and read their answers specifically.